Hey y'all, welcome to another episode of Housing Houston. I am your co-host Kayla Ewald with First American Title.
And I'm Sarah Lerner with Real Vest Property Management.
And again, we're so excited. We have two industry professionals, both founder and CEO and broker owner of their companies, here with us today. Seth Saldivar with Texan Direct Lending and Riley Reyes with Clover Credit Solutions. We're so excited because in this industry right now, we have tons of questions from you guys about credit and about interest rates and all things mortgages. So let's go ahead and open it up with telling us a little bit about yourself and your backstory and how you got into the business. So whoever wants to go first.
I'll let Seth go first.
Good.
Okay, awesome. Well, my name's Seth Saldivar. I'm the broker owner of Texan Direct Lending. So I got into the business. I'm from here. I actually met my wife in high school, and we started dating, and we went away to college together. And we swore we'd never come back to Houston, and we came straight back, and this has been our home. And so we did all kinds of stuff. I got a degree of finance at the University of Houston.
Okay.
And so I started working at a bank and got into their loan department and realized that I was good at loans, but I didn't want to work there. And so I did some other things. I've been a math teacher. Fun fact, I actually picked up dead bodies for a morgue for a little bit.
What?
I did all kinds of stuff.
Oh my gosh.
Yeah, fun fact. That's like a trivia thing. But I got into mortgage, I guess, right in 08, 09 when everything was like falling apart, and was looking for something different. And my wife was like, you have that finance degree and you used to work at a bank. What about being a loan officer? And so I knew a little bit about it, but didn't really know a lot about it. But once I got in, I really enjoyed it. I figured out I was pretty good at it, and the rest is history.
So 2008, somebody do math for me. How many years? Almost 20?
17.
Almost 20 years in the business. So you've seen it all.
I've seen a lot.
And now you are broker owner of Texan Direct. So what kind of made you step out into being the main one in charge, I guess,
one of my
essentially?
favorite stories.
Okay.
So
Good.
along my journey, I was sales manager, branch manager, team lead, and I got to see behind the scenes on a lot of the financials. And what I found is that a lot of these companies are making a lot of money, but it's staying with the top level guys, the shareholders. It's not going to the salespeople or the processors. All the people doing the hard work are not the ones getting the lion's share. And then on top of that, whenever we had COVID and rates are going crazy and business is going crazy, they started to squeeze margins. And so they were taking more for themselves, giving the salespeople less. But then in addition to that, they were charging the borrowers more too. And so they were taking from everybody. And I was like, this isn't right. There's definitely a better way. And so my wife and I had talked about opening up our own business for years, and we'd always, to be honest, we'd always been afraid of the unknown and what would that look like. And there was that moment where I was like, this is it. We gotta do it. We gotta go.
I love that.
And so in 2022, we opened up our own brokerage.
Yay.
And yeah, definitely. And it's been the best. Yeah. It's kind of twofold because I've told people I wish I would have done this 10 years ago. But I also tell people every step of the way, I learned what I needed to know to be ready to do this. So I've been at all the different positions and stations within my industry. And so I have a lot of other background knowledge that others don't from experience because I've been around. I've been at other companies. I've been the different positions.
And I feel like you're truly here to serve the client, serve your loan officers, because I know you have close to 10 with you right now, right?
Right. Mm-hmm.
And you're here to serve your clients. And you talk about your background. You were also a pastor at one point, right?
I was.
You have a very giving and serving background, and you're trying to do the right thing, even in business. And I love that about you.
All the time.
Yeah.
So our three core values are serve. So we're here to serve people. We're here to serve one another. And the second one is people. And our motto is people are more important. And you can fill in the blank. More important than a sale, more important than a paycheck, more important than, you. People are more important. And then our third one's growth. Like I don't like stagnation. I don't like the good enough. I want to grow. I want to be better tomorrow than I was today and better than I was last year. And so I want to be around people that are the same way. And that's kind of their vibe. And so that's kind of who we are. And that's where we're going.
Love it. Well, we are so honored that you're here speaking with us today. Mariley, why don't you tell us a little bit about your backstory and what got you into the credit repair business? Fun,
right?
So fun.
So I was actually born in Cuba. I came when I was 5, and I'm a Florida girl, right? I grew up in Florida. I love the beaches. And then when I was 15, my parents are like, guess what? We're moving to Houston. And I was like, what? I was just starting freshman year. I had all my friends over there. I was like, please don't do this to me. But it was the best thing that could have happened because at 18 years old, I had just graduated high school. And I used to work at a law firm, but it was all the way in Galleria. And I was learning how to drive. And my mom's like, you're not driving that far. No, ma'am. So I was like, all right, fine. I'll look for something else. So I applied for a customer service position at a credit repair company. And I remember telling my old boss, I was like, hey, I'm, giving you my 2 weeks notice. I found another job. And he told me, he's like, you're going to be back. Credit repair companies always fail. They're a scam. And I was like, ouch. No, I'm not going to come back. Okay, you'll see. So I went and I was with Improve My Credit USA, was the company at the time. I was there for 7 years. I absolutely loved it. I ended up being their office manager, but I ended up leaving because they went through social media marketing, and I was like, yeah, that's fun, but I want to keep doing credit, Yeah. So I did take a year off. I tried dispatching for 18-wheelers. Don't recommend. Whoever's the dispatcher, hats off to you guys because it's tough. And I was like, no, my passion is still with credit. Like you said, helping people. That's my biggest thing. I need to be fulfilled. So I was contracted by another owner of another credit repair company at the time. That's when you and I actually met. And he's like, hey, I need somebody to take over. I need you to be president. And I was like, sure, count me in.
Wow.
So I started working for him. I was there for about 14 months. And then I was like, you know what? I think it's time I need to do my own thing.
You're like, I can do this.
Exactly. So I was like, I need to do it. So I started in 2020.
Okay, yay.
Yes, right before COVID. I started with just enough to pay for my CRM. I didn't know how I was going to pay my apartment. I didn't know how I was going to pay anything. But I was like, you know what? I'll figure it out somehow. So I did. And thankfully, we are a team of 7 now.
Yay.
Wow.
And I love being able to help people because my parents were scammed in credit repair when I was like 12 or 13. I didn't know anything, and they were scammed. So then when I started doing it and I saw that it worked, I'm like, hold on, no, it does work if you do it the right way. So that's my biggest passion, being able to help people and not get scammed.
Love that.
That's awesome.
Absolutely. Yeah, thank you for sharing that. So I'm curious because we do hear it's a scam so often. What should we know?
So the biggest thing I always tell everybody is anybody that's promising results, that's already a red flag because we can't promise anything. The only thing I can promise is that I'm going to work hard for you. That's it. And then if they charge up front, it's against the law for us to charge for anything we haven't yet done. So if they say, hey, give me $1,500 or $1,000, it's illegal. We cannot charge for anything we haven't done yet. So those are the biggest red flags to watch out
for consumers, real estate agents, investors, anyone, especially consumers needing to fix their credit before they close on their loan. Don't pay anything up front. Fraud is real and always happening around us, so protect yourself.
Yes, and one thing I see right now on social media circulating a lot is, hey, pay extra and we'll make it faster. We'll expedite your file. There's no such thing. By law, the bureaus have 30 days to investigate. You can't go around that.
So then I think people want to know, how do you get paid, right?
Yeah. So we are monthly. So what we'll do is we do have an enrollment fee, and that covers an app that the client is able to access and see everything we're doing. And then 30 days after, we charge the monthly fee. So once we complete their update, we know what worked, and we send out the next round, then that's when they get charged for the last 30 days.
Nice.
Love it. So you guys work hand in hand all the time, right?
100%.
When are you coming into play? Are you seeing it on your side from the mortgage standpoint? You're like, we need to get your credit up. Here you go. Or are you seeing it from your side, like, let's get your credit up so that you can go and get approved for a house? Or both?
I think both.
Yeah, absolutely. In the natural course of what we do, we take a look at the client's credit, and I tell people, like, I'm a client ER, a credit ER. And so, like, There might be a little tweak. I've been doing it long enough. I can tell, oh, you need to pay this card down by this much. You need to do this. But I tell some people, you need credit open heart surgery, and I'm not qualified to do that. So let me get you to a professional that can help you. But it definitely works. I've had clients. I had one last year that had like a 410 or something, and they follow the instructions. I tell them, you have to do what they say, like exactly. If they tell you jump 2 feet, you have to jump 2 feet exactly.
Because in the span of the time, you're looking at working at it for maybe 6 months to a year to get where you need to be. And a lot of people don't see the long-term win from it. They don't want to put in the work. So yeah,
but sometimes
follow
it could
along.
be, I've seen it as quick as 2 or 3 months. Everybody's different.
Good.
Everybody's profile is different. Everybody's situation is different. And what I tell people is, you didn't get in the mess overnight. So you're not going to get out of it overnight, right? It's going to take a little bit of time. But I've seen people go from the 400s to the high 600s,
So
low
he followed
700s.
it.
He followed it to the T, got the house they wanted. And so it really works. But you gotta work with the right people, and you have to listen to what they say. You have to follow the instructions.
What are some common pitfalls you see that people like? Tell us how to not get in the mess. And I'll ask both of you, like, what should we not do so that we can buy a house when we're ready?
So I will say, and I'll let you answer this, but please don't lend your mom, your cousin, your brother, your friend. Don't let anybody borrow your credit. Because I see that happen so many times, and especially that they co-sign. I don't know if you run across that a lot. They co-sign in the car, and then they're like, oh, but it's not my debt. Well, you legally signed for it. So you are obligated to pay for it. It is going to count against you if, your son has a late payment. And I've seen that all the time where I have a client that it's a mom, and she co-signed for the son's car. And guess what? The son is now 6 months behind on the car. And there's nothing we can do because you co-signed for it.
Personal story. Side note, me and my brother have similar names, Kayla and Kyle. We are 1 digit off of social security number, and our credit has been jacked up. I don't know if I'm allowed to say jacked up on this podcast. His stuff on mine, my stuff on his. We've disputed. We've done. I don't know why. It has been a headache our entire lives.
Same thing happened to me and my sister. My name originally is Miraili, and my sister's Miriali. Only one letter changes. It just flips, and then our social is 2 numbers apart.
Thank you.
So in '08,
You feel my pain.
She went through everything, and then I was 14 years old apparently with a repo, and I was like, how did that happen? Yeah, I was like, okay.
Yeah, that's funny.
So yeah, that happens a lot. Unfortunately, the bureaus confuse the profiles a lot. So I always say, be on top of your credit. Be checking it at least every 3 months.
Okay.
Don't wait too long, because sometimes you're going to be surprised. You're like, I didn't know that was on there since last year. Check it every 3 months.
Okay.
That's a great tip. Credit monitoring, keeping track of what's on there, what hops on, what hops off.
They're
very
all
important.
different. So what do loan officers actually look at? And I mean, like the 3 big ones. Do you look at all 3, or do you hone in? Is there one?
Do you
we
look
should be
at
paying attention
history?
to?
Do you look at credit card? How much is actually? You know what we're asking.
They look at everything.
Okay.
Which is that's actually a very, very good question. To back up one though, one thing that I see a lot is timeshares. Please, 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 please. Do not. I know they're going to give you free tickets to Cirque du Soleil if you sit through the presentation. Please do not sign up for a timeshare.
Y'all are funny.
It's like the mafia. It's like
it is.
you don't ever get out.
My grandparents owned a timeshare, and my parents' generation to get out of it has been. I mean, they're not even alive, and we still can't close it out.
So legally, they're not. It's not. You don't own any real estate.
Right.
But they will report it as a foreclosure on your credit report, which causes all kinds of issues. It's not legally foreclosure because they didn't foreclose on anything, but that's how they report it. And it's just a nightmare.
So
timeshares.
Yes.
Okay. Anything else? What else do they look at?
what should we not do?
Okay,
That was
sorry.
What you said about signing for others is, vehicles, huge. That's a big, big one that causes a lot of problems, a lot of heartache. So what do they look at? They look at everything. A lot of times people think, oh, well, I just need to get to a 640 and I'm good. Well, maybe. They look at your payment history. They look at if you were delinquent, what were you delinquent on? And the way I explain it to people, you're asking a stranger to loan you $200, $300, $400, $500,000, but you couldn't pay your $200 Visa card. They don't know you, and they're like, oh, that makes us a little nervous. And it would make you nervous too. And so they look at everything. It's not just the score. Now, having said that, just because you had something go late or something mess up, that doesn't mean you're out of it. And there's definitely solutions. But they look at it all. They look at, they call it credit mix. So do you just have credit cards, or do you have installment payments like a car note or something that's a monthly payment that's regular? The best thing you can do for your credit is have a good credit mix. So have at least one mortgage, at least one installment, and 2 revolvings. And then the revolvings, your credit cards, you want to keep it at like 10 to 20%. That's like the sweet spot. And if you can do that, you're going to be really happy with your credit.
And she's nodding. She agrees
Yeah,
with
you're
you.
nodding.
She's like, he knows what he's talking about.
That was great lender speak. Take it down a notch. What's revolving? What's like, tell me.
That's
Like,
good.
do I spin around? What?
So revolving are your credit cards. Think of it, as a revolving door. You're able to utilize it over and over again. An installment, you have a term amount and you're going to end up paying it. So every time you pay it, it has an end date.
Like a car.
Exactly. Or like a personal loan, student loans. Yeah. So you have an end date to pay those. And I love what you said, mix of credit, because that's the one that's often overlooked. When the client wants to establish credit, they always think, oh, I need to get a secure card. But they don't think, oh, I need that mix of credit to get, that extra 10% on my credit scores, because I've seen it that they didn't have any type of installment. As soon as they added an installment, boom, 50 points extra.
Wow.
So it makes a huge difference.
Wow.
That is great information to know. Now we're going to cut to a quick commercial sponsor break, and we'll be right back.
At Lone Star Elite Painters, they believe your home deserves to shine inside and out. Serving Magnolia, Houston, and the surrounding Texas communities, they are proud to deliver a top-tier craftsmanship on every project, whether it's transforming your home's exterior, refreshing interior spaces, or giving your cabinets a flawless new look. Their team is dedicated to the precision, quality, and care with every brushstroke, treating your home like it's their own. They believe painting is more than just color on its walls, and it's about creating a space you're proud to live in. With years of experience, a passion for excellence, and a commitment to customer satisfaction, they are the local experts you can trust to deliver elite results that last. So if you are ready to boost your home's curb appeal or transform your interior, call Lone Star Elite Painters today. Texas proud, elite results. Visit LoneStarElitePainters.com today for your free estimate.
And we're back. Thanks for joining us. We were just talking to you guys, and I really want to know, you're telling me we should have a mix of credit. What, if I need an installment, what would be something I should do to get an installment?
So I recommend credit building accounts, and I think I've sent a few of them over to you, Seth. One that I love for installment is called Kovo Credit. And it's just $10 a month, and it's all a savings account. So you do the enrollment for 24 months, so a total of $240 is what you're going to invest, which you get all back. And then every month that you pay those $10, they report to your credit in all 3 bureaus as if you had a personal loan with them. So that way you're building credit, but you don't have to, 1, get an inquiry, because we don't want inquiries on your report. Right. And then 2, it's going to help build your credit in all 3 bureaus, because, I've seen the Experian boost all the time, but guess what? That only helps Experian. And then on top of that, you give the bureaus access to your bank account. So I'm like, you know what? The bureaus already have enough information. They don't need to know what your transactions look like. So Kovo Credit's a great one, and then Self is another great one too.
Okay. That's great information. We might just have them call you, and you can set them up.
That all sounds good. We'll send them to you. Okay, so credit is fixed. Let's say they get to a spot where they need to in order to buy a house. What's the next step?
So the next step is really to sit with a loan officer, and they call it processing an application, but we need to get the client's information. A lot of it is like identifying information, like your name and date of birth and social, but we're also going to ask information about your finances. So where have you worked for the last 2 years? What kind of income have you had for the last 2 years? And then how much money do you have in the bank? A lot of times people want to kind of shield certain details from their lender, but really it's kind of like going to the doctor. He can't really help you if you don't tell him everything. And so I always tell people, just tell me everything. Like, that's how I'm going to be positioned to help you the best. Yeah. A lot of times people don't I'll give you an example. Sometimes people want down payment assistance for their closing costs and their down payment. So they don't want to tell you they have $100,000 in the bank. They have the money. They just don't want to spend their money. They want to spend your money, which is fine.
Yeah.
But what I tell people is the more money you can show, the stronger your application looks. And we're not going to make you use what you don't need to use. As a matter of fact, it's illegal for us to make you use what you don't need to use. And so it only helps you to fully disclose everything.
And then you give them, I know there's a difference, and you might want to tell us the difference, a pre-qual approval and then a pre-approval.
There is a difference.
Is that the right two?
It is.
Hey!
Yeah, no, you're good.
Okay, so, and then that's when you would present them with this.
Right.
And then they could go to the real estate agent and start looking at homes.
Right. And every lender does it a little different. We like to talk to the client through all their options because they're different. And they have different ramifications, right? One might have a really low monthly payment, which is going to position them for cash flow, position them for financial flexibility throughout the month. But another one might have a really low barrier of entry. So we might be able to get them in for 0 down, but that monthly payment's higher, so they don't have the flexibility. So we really try to chat through them with what are their goals, what is going to be important to them today, but what's going to be important to them a year from now, 2 years from now, 3 years from now. And then just present them the options so that they can pick. A lot of times, so I've been doing this for a while, a lot of times the lender will pick what's either easier for them or what's going to make them the most money.
Absolutely.
Which is obviously the wrong way to do it. And so we show them all, we try to find out what their goals are, and then we present to them, these are the different options. These are the ones I think kind of match your goals, but ultimately it's up to them to pick.
Yeah.
I love that it's not one size fits all. And that's the benefit of a person. I think I see a lot of people who do their internet research and then they think they're pros, and it's like, oh, okay, let's back up a minute. Let's talk. And so what are some things, when you say it, what are some, I guess, customizations you may do for people that we maybe don't know about? I'm thinking specifically, you brought up down payment assistance, like
creative options.
Yeah. When are some ways we can maybe get something done that we normally wouldn't be able to?
Sure. So there's, in the Houston market, there's over 24 different down payment assistance programs or options. And most people, when you look, like if you Google it, it's going to tell you one or two. And so, and they all have different criteria and qualifications. And so depending on the client, the top two may not be a good fit for them. It might be that they would actually benefit from this other one that never shows up on a Google search.
That's insane. You said 2,000?
24.
24. Oh my
I'm
God.
glad we-
Wait, hold on. Did he say 2,000 or 24? I was like, wait, there's a lot of options out there. Okay,
There are. But
24.
24.
Okay.
Still
a lot.
It's a lot.
It's a lot because most lenders don't even talk about them at all.
Right.
Because
Well,
it doesn't
It's a lot to
benefit
keep
you guys.
up with too, because they're changing, and I've heard like grants run out, and so
Yes.
a lot of lenders I think are like, I don't want to bother with that, so they'll kind of dissuade people from it.
and what you mentioned that they're reduced, they pay the company less. They're a reduced compensation product. And so there's some lenders that don't even carry them because it pays them less. And so they're like, well, I'll let somebody else do that.
I actually had lenders tell me I do not do down payment because I don't get paid for them. I'm like, okay. Noted. Thank you. Also know a lender who, whenever we went to get approved 9-10 years ago, said, oh, you can be approved for X amount. And me and my husband are like, what? No, absolutely not. We do not. They were just trying to get the top dollar because of the top compensation after, not looking out for our best interest. So super important for that. Okay, so once you're under contract, they're going to show the homes, they find a home, they're under contract. What are some things from a credit repair or a credit standpoint that might delay a closing or kill a deal?
If they go and buy furniture before they close on the house, or get a brand new car to park in their driveway.
Or the refrigerator, or the washer and dryer.
Yep. So don't run your credit for anything. Pretend you don't have credit. Pretend you don't have a social security number for the next 30 days until you close. Don't run it at all. Let only him. He'll run it when it's necessary. And then other than that, you don't have credit at all.
So you're under contract, you have 30 days. On the 20th day, like when will you guys find out that credit has changed? Do you do an update of their approval and then now all of a sudden there's a car that they got a loan out for? Like what does that look like?
So every lender's a little different,
Okay.
but most lenders have to pull credit again 3 days prior to funding. And so you can get all the way to the end, and they don't want to pull it ahead of time because we don't want to pull, multiple times. And so right at the very end, they check again. And if there's been any changes, if there's been any inquiries, we have to find out what those were. If there was accounts open, we have to add those to the mix. And a lot of times the lender's going to require a new report be pulled. The issue with that is now there's going to be a new credit score. And now you may have qualified and now you don't. And I've seen that happen. I have a little spill. I tell people, I tell people verbally, I have an email and I have a video, and they all say the same thing. And I tell people, do not buy a plane, do not buy a boat, do not buy a truck, do not buy, and so I had a guy that bought a Mercedes, and we get the call that his credit's different and now he's below qualifying. He can't buy his house. And so I had to pick the phone and call him, and I asked him, did you buy a vehicle? He said, yeah. I said, what? Why did you do that? Well, you said not to buy a plane, boat, truck. He said, you didn't say car. I'm like, are you serious?
No,
He's like,
Seth, you're making that up.
I'm not
You're
making that
it
up. That is a true story. And no, I didn't remake the video because I mean, that's kind of what
That's
you
a
get.
one-off. That's
that's
a
kinda
one
what
in
you
a
get.
million. No. So what happened? He didn't get the house.
He didn't get the house.
Did they extend and he worked? No, he
They-
lost out.
He lost out. Yeah.
That's
And a lot of these
devastating.
car payments, guys, I've seen $1,500, $1,600 car payments. It's out of control. And so you've got to, it's got to be part of your budget. You have to plan to buy a home. You can't just wake up one day and decide you're going to do it. And then once you do, you have to be cognizant that your credit has to kind of stay the same until you get the keys in your hand.
So let's talk about car payments since we're on the subject. What are some tips you can give us to get that down? Should people refinance? And if so, when's the right time to refinance that car payment and maybe get it down? Or what do you recommend?
As soon as they can. So if they bought it and, they are trying to purchase a home and they want to refinance, I always say refinance it first because it's going to bring your monthly payment down too. And then try to do it at least 6 months before. So 6 months prior to going and applying with the lender. And then to go buy it, don't go and apply at the dealership because they're going to tell you, oh, we're just going to run it once or twice. I've seen statements, or not statements, but reports that the inquiries are like 20-something inquiries when they went to purchase a car. Mm-hmm.
So I've heard if you run inquiries within a certain amount of time, it doesn't ding you. Is that true?
Yes. So
Okay.
it depends, like for lenders, if you go and apply, I think it depends on which FICO model they're using. They have between 15 and 45 days. So I've heard lenders say, hey, they have a 15-day window, or a 21-day window. So always ask your lender what window you have. And then same thing for the car. You have a certain window. So I would say if you can do it all like in 2-3 days, do it. But also, I don't recommend it because although it only counts as one, it still shows up on the history. So when we pull your report, we can see everything that you applied for. So it may not have counted against you, but it still does look pretty bad. And correct me if I'm wrong.
Yeah, absolutely. I would say that if you're going to get a car, do not get financing at the dealership. Go to a credit union, go to a
Yes.
bank. They're going to run your inquiry once.
Mm-hmm. One place that I've purchased a car before, I don't know if you've heard of them, it's called cargurus.com. So I love them. You can get it with Capital One, Westlake, and they have another one, GS something. And they just run it, and you can go with your pre-approval at hand and say, hey, this is what it's going to be. This is how much I have to give down payment. And it's always going to be lower than what the dealership gives you. And I'm telling you from experience because I had to go through that before. So I was like, sure, run it at the dealership. I was like, yeah, if you guys can beat this rate, then for sure. It ended up being higher. I was like, no, we'll stick to this one.
Thank you.
Yeah.
Good tips and tricks. Okay, so moving to our investor clients. Okay, here we go, investors. What does the credit strategy look like when they're building their portfolio compared to a first-time home buyer?
Pretty much just depends on what they have on their credit report. So we always have to do the analysis first because it's kind of like if you call your mechanic and you're like, hey, my car won't start. Well, it can be 1,000 things,
Right.
So same thing with the credit. We have to look at it, analyze it, identify what areas are impacting you. And then once we identify that, then we can set up a game plan. So, if we need to lower balances, if you have collections, what's the best approach? How old are they? Are they too recent where it's not beneficial to dispute? Would it be better to settle? Or, hey, we have a good chance of getting it off if we dispute it. So it just depends on what their credit looks like.
Love that. And then from the loan side, working with investors, I know I've heard your presentation about creative solutions in all areas. What does that look like when you're dealing with investors, and what can you offer them? What loan programs and what solutions?
There's so much for investors today than there was 5 years ago, 10 years ago. When we had the crash, you saw banks and lenders start to really restrict what they offer. And it seems like the pendulum's swinging the other way. We lost stated income, stated asset loans, but we've got some products that are pretty close to stated income, stated asset. So there's a lot for investors. There's products that you can do in the LLC name instead of the personal name, which I know a lot of people are very interested in. There's loans. Probably the best suited one for investors is called a DSCR loan, and it's really just a cash flow loan. Is the rent coming in from that property going to be $1 more than the actual mortgage payment? And if it is, then we don't look at bank statements. We do look at bank statements. We don't look at tax returns. We don't look at pay stubs. We don't look at W-2s. We're not trying to verify their income. We're not looking at debt to income. We're looking at, do they have their credit score? Do they have the money in the bank? And that's pretty much it. So it's really, really easy for investors. But there's also profit and loss loans, bank statement loans. There's all kinds of options for investors.
And do they know about these options, or do you find yourself educating them when they come to you saying, hey, here's DSCR? Is that what you call
Right.
it? Okay. Or are you explaining how they work to them?
There's a lot of misinformation, and then they've come a long way. So DSCR has been around for a while, but when it started, it was very clunky. People didn't know how to use it. People didn't know how to close the loans. And so people that were kind of like the early pioneers have some horror stories about how bad they are. But they're really not. There's whole lenders that have decided this is what I want to focus on. So they're not even worried about conventional and FHA and VA. They're just focusing on this because it's a really easy product to get through, and it's really beneficial. And so I do find that a lot of people don't really know what's out there.
And as a broker, that essentially means you get the deal and you can shop around for the best deal for that client and the best program out there for that client. You're not just catered to a couple. You have access to all.
Absolutely.
Okay.
And so what we do is we'll look at their situation and see what are the different lenders that can do their situation. And I'll give you an example. Just recently, we had a buyer that they're a first-time home buyer, so they've never bought a home before, but they want to buy an investment property as their first property, as their first purchase. They're self-employed. They've been self-employed for less than 1 year, and they want to do the DSCR cash flow one, right? And so, but they do want to see most lenders want to see a 2-year history of employment. So they're not looking for the income, but they're looking for the employment. And so out of the 4 dozen lenders that we had a couple that would actually do it.
Love
and
that.
So we find the scenario, okay, these are the ones that can do it. Now, out of these 2, these are the different terms that they'll offer you and let them pick. But you're absolutely right. As a broker, we're able to shop it around and find who's the best fit for them.
That's great.
And I do have one quick question because I get this all the time and I want you to clarify it out there. A lot of the clients think that they can't switch jobs when they're going to buy a house. Like if I'm doing, accounting, I have to do accounting until I buy a house. But it's not the case. You just can't switch from a W-2 to a 1099 or vice versa, right?
It depends on what kind of loan they're getting.
Okay.
It depends on, is it considered a lateral move, or is it considered a move up or a move down? It depends on, are they going to be salary or hourly? Are they going to use overtime or not? There's a lot of factors. It's a lot safer if they don't switch, but it doesn't necessarily mean that they need to not switch.
Yeah, like if it's the same, thing, just a different company, then that's fine as long as they stay hourly or however they were getting paid.
Right.
Okay.
There's a lot to it. The best advice I would say is talk to the loan officer and explain what they want to do. When I was younger, I used to hear it's easier to ask for forgiveness than for permission. That's not true when you're buying a house. It's the other way.
That's what I still live by, Seth. Okay.
It's the other way. But that's right. But I mean, a lot of people just hear one thing, and I mean, think about the financial hardship that could make on a person that needs to switch jobs, but they don't because they don't have the right information. So that's why it's important to ask questions. I always tell people, ask questions. The worst that you can be told is no. And then make sure you're working with the right person, because there are viable ways to switch jobs and it's okay. But there's also ways that you can switch jobs and it's not okay. So
Can you tell a story where credit repair ended up saving a deal? Do either of you have? I know we told the one about the car, but when
That
did
was
it,
a bad
like-
one. That
was
did not
don't
save
do
the deal.
this. But what is the do this? You know,
Well, I had one that we just closed, I want to say about a month ago. They had actually been trying to fix their credit for 9 years. And they went through 2 other credit repair companies that took their money up front and didn't do anything. So we set up a game plan, and within 90 days, they closed on their home. So with contract and everything, closing table within 90 days. So I was like, all right, cool.
Oh, that's a huge win.
That was
After
a huge, I was like,
9
I'm going to your
years?
closing. I'm taking you guys a closing gift. I'm there.
Was it their first house?
It was their first house.
Stop. I
It
love
was their
that.
first house. I was like, I didn't know you guys were trying to fix it for 9 years. And the husband's like, yeah. When she told me that she was going to try another company, I was like, do what you got to do. I don't think it's going to work. And then once I called them, I was like, hey, guess what? You guys are ready to go. We started in the 500s. They ended up in the 700s.
You need to shout that from the
Oh, I got pictures. I got a review. I got everything.
Huge.
So can I ask, what's a typical, like, what, you know, they always put the asterisk at the bottom of the before and after pictures, results, not typical. What is typical of credit repair?
So for me, my goal is to take them to a 640. That's
Okay,
always
'cause
what I
that
want.
gets you
That gives him
Most of
more
the time.
options, right?
right?
yeah, absolutely.
Because usually, I know they say all the time, like lenders say, hey, we can do it with a 580. I'm not a lender, but here's my 2 cents on that. If you have a 580, chances are you shouldn't be buying a house. Not yet. Let's work on some of the habits that got you to a 580 in the first place. Once that's corrected, once we get you to a 640, then go and talk to Seth.
Yeah,
Correct me on that.
that's great. It's great advice. So if you buy a house at a 580, your house payment, because of the interest, they're going to charge much higher interest. And so your house payment will probably be maybe as high as 20% more than if you had a 640. And so it's definitely worth it to put in the work, do what you need to do, and get to the 640 because you're signing up for a 30-year commitment. So why don't we take a couple extra months, do the work, and then have something that's 20% lower than what it would have been. So I'm a mortgage broker, and I think interest is the biggest ripoff ever. And so the less interest you can pay, the better. And so, yeah, that's great advice.
So do you try to get your homeowners to choose like 15-year or 20-year, or do you keep them at 30-year?
I present all the options,
Okay.
depending on what they want and depending on what's important to them. But a lot of people don't think about 15 and 20 years. And so if they're looking at, if they're a savvy buyer and they're like, I want to pay the least amount of interest possible, then we definitely look at those. There's a lot out there.
Okay. Myth or fact? If you pay 2 additional payments a year, or I guess just in general, it drops it like 7 years off the top.
That's a fact.
That's a fact.
But you have to put it toward principal, and you have to do it every time.
Okay. That's a fact.
That's incredible.
So if you, make 2 additional payments, like outside of your
Principal
normal payments, principal only, it drops it down by years.
By years.
Okay, we have one more commercial sponsor break for you guys, and we'll be right back.
When your home is damaged by fire or water, it's more than just physical, it's personal. That's where Renew Medic steps in to make the process a little easier. They understand how stressful it is when your kitchen is disrupted. That's why their cabinet restoration process is built to be fast, safe, and minimally invasive. They remove damaged cabinetry fast so you can get back to normal sooner, support your countertop so you can still use your sink, dishwasher, or cooktop, and work efficiently to bring everything back to how it was. Whether they're restoring custom or standard cabinets, refinishing surfaces, or matching finishes and color, their goal is simple: to help you feel at home again as quickly as possible. You shouldn't have to face this kind of disruption alone, and with Renew Medic, you don't have to. They are here to help you rebuild one cabinet at a time.
We're back, and we're excited because we want to talk about 2 things really quickly before we have to start wrapping up. This time has flown by. We want to talk about student loans and medical bills and just what do we need to know about those things. So I'm just going to toss it to you.
Toss.
So on the credit side, medical bills, I love them right now because anything under $500 no longer gets placed on your credit report. Now, if it's over $500 though, they still do get placed on your credit report. Now, I want you to fact check me on this, but for mortgages, they don't count medical debt against you.
I've heard that as well.
Yeah.
Myth or fact?
That's a fact.
Okay.
There we go.
We're here to clear it all up
Yes.
today.
So what I tell them too is if we can dispute it and we can get it off of your credit by disputing it, great. If not, if you have the funds, let's negotiate, let's settle, because with medical collections, once you pay them, they're automatically deleted from your credit report. Because one thing is paid in full and one thing is pay for delete. So we always want that pay for deletion when we pay off a collection or anything that's negative on the report. Otherwise, it stays on the report for an additional 7 years as a negative account because there was recent activity on it.
Huge.
Oh, pay for delete. Okay.
Yes, ma'am.
So
School loans.
Yeah.
So student loans, we saw a huge drop on our client scores because they started reporting late. So the first thing that they need to do is go online. If they don't know who their loan servicer is, find out, get on a payment plan with them. And then what they were doing before is if you got on a payment plan with them, they were removing anything late that you had. So it's very important to do that. And if you're not caught up with them, do it now because they are going to start garnishing your wages.
Oh my goodness.
Mm-hmm.
Okay.
Love it.
Yeah.
Anything?
Anything to
What
add
she
on
said.
those?
What she said.
That's right.
No, absolutely. Facts. So for medical debt, we don't consider medical debt. So a lot of times people will have a certain amount of money and they're like, I want to pay off some of my debt before I buy a home. And they pick medical debt.
That's the wrong choice.
That's
No.
Yeah, don't do that.
Pay it, but maybe not today.
Yeah.
That's not, it should be at the bottom of your list
Yeah.
because it's not going to give you any benefit towards buying a home. Zero. So that's number one. On student loans. So for lenders, we look at student loans differently. A lot of consumers think, well, if my student loan is in deferment, if I'm not making a monthly payment, that's not counting against my debt to income ratio. And that is not true. So that's a myth.
Okay.
That definitely counts towards your debt to income
We
ratio.
have a myth in the house, guys.
That's right.
It counts towards DTI.
It does. And depending on what kind of loan, it's different. Unfortunately, each loan type has a different calculation. But some of these student loans are massive. And so definitely you need to be aware of that, cognizant of that. And in the event that you come out of deferment and you don't pay, you get hit with 30-day late, that can take you from a 700 to a 600 to a 500
Wow.
real fast.
Okay. DTI, you brought it up, and I know we said we were going to wrap it up after student loans and medical bills, but is that ratio, I know you said different situations or different categories have different percentages for the DTI. Is that lender by lender? Does everybody have different DTI ratios per category?
That's a great question. So, very good question. So, the different loan types, which the four major kinds are USDA, VA, conventional, and FHA. And then now the fifth is non-QM, like your DSCR and all that kind of stuff. They all have different guidelines. And guidelines are things that everybody has to play by. So, FHA says the max debt to income ratio is 56.99%. Conventional says the max DTI is 50%. And everyone has a different one. But some banks have what's called overlays, and that's an additional guideline on top of what everybody else has to play by. And so depending on who you're working with, they might say, oh, your limit is here, when really it's here. It's just that they've got an additional cushion that makes them feel better.
That's exactly what I needed to know.
Yep, that's awesome. This has been so informative. I love all the information we have.
And y'all are really funny.
Yeah, good stories.
So one more thing I want to share with the consumer and the real estate agents is where you're checking your credit matters. So if you're checking on Credit Karma and you go with Seth, guess what? If you have collections or anything like that, Credit Karma is going to tell you have a 700. When Seth pulls it, it won't be a 700.
Wow.
So you want to make sure you're checking your FICO scores, and not just any FICO. For mortgages, you want to make sure they're 2, 4, and 5. Because those are the FICO models that mortgage lenders use. But if you check, FICO 8, it may be a little bit different than what Seth is going to see because it's not mortgage specific. And like we talked about earlier, medical doesn't count. So it can count on FICO 8 and your scores are going to be in the 500s. And then with medical, it won't count for mortgages, so you'll be in the 600s. So where you check your credit matters.
Can they go publicly to FICO 2, 4, and 5? Or
So they can
whichever
check on
numbers?
myfico.com. They can check directly.
Which FICO numbers?
FICO 2, 4, and 5.
2, 4, and
Yeah,
5.
2,
Okay.
4, and 5.
And they can go to FICO.com.
They can go to myfico.com and they can actually pull their mortgage score on there, and it won't cause an inquiry or affect their scores at all.
Wow. Good to know.
That is good.
Good stuff.
What about you, Seth? Do you have any parting knowledge for us?
Absolutely. So I think the biggest thing is if you're going to buy a home, who you work with matters. And so a lot of times people try to chat GPT or Google all the information and they want to be the expert themselves. And this is like their first home that they bought, or maybe it's their 5th home that they bought. But like we're doing dozens and dozens of transactions a month. And so I tell people it's kind of like if you needed surgery and you chat GPT how to do surgery on yourself, that's just not a good idea. And so like your story earlier of the client that was trying to fix their credit for 9 years, just use a professional. Right. Use somebody that you can trust, that knows what they're doing, that this isn't their part-time thing. Like we live, eat, and breathe this stuff.
That put people first.
Yeah.
Yes.
And we want to help you. Like that's why we're here. And so if you're going to buy a home, if you need to work on your credit, please don't Google it. Please use a professional that you can trust. Who you work with matters. And if you pick the right person, you're going to be much better off for it.
That's great. And we love working with you. We love working with you both. I know that you partner up with real estate agents quite a bit. So is there anything that you want to make sure they know that you can offer resources and tools whenever it comes to real estate agents?
Sure. We have so much. And so what I like to do is connect with the agent, find out everybody's business is different. Some people, like right now, we're doing a bunch on social media, and some agents are all about that, but some agents aren't. Some agents are like, you know what, I want flyers for open houses, or I want, whatever. And so we like to connect with the agent, find out about their business, where they're going, and see how we can come alongside them and help them out.
I love that. And for you, real estate agents, partnerships, what does that look like?
So we are more of a resource for you guys. So anytime you have a client that you may just have a question, unless they have an 850, we can probably help some way, somehow. So even if it's just, hey, tell them to do this, we'll give you guys the tips and the tools, and you don't have to pay us anything.
Yeah. Thank you guys so much for joining us today. We've loved getting to know you and your businesses better. Again, we had Seth Saldivar, broker owner of Texan Direct Lending, and Mariley Reyes with Clover Credit Solutions. She's the founder and beautiful CEO. So again, I'm Kayla Ewald, your co-host with First American Title.
And I'm Sarah Lerner with Real Vest Property Management. We will see you next time.